Thursday, February 8th, Stan Ehrlich, market analysis. You know, I start out with the indexes and usually the E-mini March futures contract at this time, and I'm going to do it again today. So what do we have? A market that has recently been very overbought, but that was a week and a half ago. And now with new highs in price, we don't seem to be able to get into overbought condition again. Now about 7 days after the last overbought yellow bars, which coincide with the overbought level on the RSI chart at the bottom. So what do we got? Maybe a little divergence here. New high in price, but not a new high in the indicator. I continue, and it's frustrating, to look for a downside technical correction. Now, I also said that before January 31st, which was a sharp down day, but I was looking for more than that, not too much more, but more than 1 day's worth. And I only got 1 day and a little bit less than I expected. So I think it's going to happen again, and very soon. Best I can say, I wouldn't go long up here. If you're long, I'd be looking to raise my protective sell stops under the market. And I'd be looking for new short sell signals to maybe scalp something out or trade something on a swing trade on the short side for a short while. Next chart is the spider. Basically the same commentaries here. We do have a gap to close. Yesterday, the market gapped up. Gaps are almost always closed. Today's high is 498.35, when yesterday's high was 498.53. So today's high is just a little bit below yesterday's high, making it a doji with a very small trading range. And frankly, it feels like the market's waiting for something again. Maybe another Fed announcement, maybe some decision by the courts, or I don't know what. I don't care. I'm not a fundamentalist. I'm a technician. So next chart. The spider 1 minute opened a bit higher. I got overbought on the first couple of minutes for a short-term scalping idea. Then it made new highs after half an hour or so and went sideways. And we basically have been going sideways, a little bit new highs, but not that close to it since yesterday, most of yesterday. So today, I meant to say, actually, opened around unchanged and it's just gone flat out sideways. That was yesterday when it opened higher. That was the gap up yesterday. Next chart is the DIA. Well, we are having the possibility, premature to say, but this is how they start, a double top. It's very small. It's only about 5 days from high to high. But if we start to head south here, then we will have had a overbought condition with a bearish engulfing that did not work on the January 31st date. And we have slightly higher highs. I keep mentioning that these sell and buy signals that I have with green and red bars, excuse me, I'm getting over a cold, are often, as you can see, major tops and bottoms as we go through these charts. Often they are also part of the topping out or bottoming out process and not necessarily a profitable signal, but part of the process, which may take a few days to maybe even a couple of weeks or more. So that's what I'm thinking. Short-term downside correction, probably down to 378 soon. Next chart, Russell 2000, different story. Overbought, topped out December 27th, came down into support, got oversold, rallied again, and now we're going back and forth in a little bit of a sideways range. So no particular direction or commentary for the Russell at the moment. Qs, similar to the other indexes, new high ground, but not in the indicator, divergence. Very sorry about that. So higher high allows for a bearish engulfing if we can get below yesterday's lows, but it won't be a sell signal, an ER sell signal, because we weren't overbought within the allotted back number of days. And looking for a short-term correction. NASDAQ futures contract, NQH, same story. Downside correction, I think, is going to be back down to approximately 17,150, about where it got down to before, or maybe a hair lower. There is a chance it could come back into the support area, but I think that's a little bit too far. Next, we're looking at the 1 minute E-mini sideways, doing a lot of nothing. So let's go to futures. E-mini March futures contract, ES. No, I'm sorry. This is OJ. Let's get rolling here for real quick. Back to our, there we go. Sorry about that. Slightly lower on the day, very small amount, almost dead unchanged on the indexes overall. The only thing that's up any significant amount at the moment is the Qs, and they're up a point. Not a lot. So you can reach me, by the way, at info@ersignals.com. Looking for a correction. Next chart is the March futures, NASDAQ, NQ. Looking for a downside correction, another dip down. About where it got to before, or a little bit lower. Now bonds have topped out twice now when getting overbought. The first time back on December 27th was right at a resistance area. Called it at the time. I'm sure I did. I don't remember. And this time we simply got overbought close to that resistance area and didn't quite get there. And it topped out. And now we're seeing a minor new lows for a little over a week and a test almost to the next support area down here. So looking for a little bit lower, and maybe it's going to drop off to 117 area. Right now at 120 and about a third. Next, notes. Coming down a little bit quicker, a little bit faster, and about to break into new low ground and have a little bit more of a downside correction, maybe down to 109, 25, 30 seconds, something along those lines, and then up. Now, remember, I am basically bullish in stock market indexes and interest rate futures, both groups, but I see the likelihood of a short-term correction before we start to make new highs by any major amount. Next chart, crude oil. Popping up pretty good today after testing support area. Didn't quite get oversold, doesn't have to every time. And we're between a rock and a hard spot. So I'm looking for a move back up to 79.50 and maybe up to 82. Next, natural gas. Not the same at all. New low close yesterday, the day before, and again today. So that's 3 days in a row. But we're now just getting into oversold condition. And we're just about to hit a previous low back in December. So maybe it's going to touch that price level right around 1.845 and then bounce. But I'm looking for the beginning of a bounce. But the trend is down, and I am expecting intermediate to longer term new lows. Heating oil. Minor new high, but it's for a significant amount of time since November. But again, we are bumping against a major resistance area just a little bit higher, and we are almost overbought. So I think it might bump into the red zone and turn around and go right back down again. Next, gold. Sideways, in support. Doesn't seem to want to bounce very much. Really can't get its act in gear on a rally so far. Lows are a little bit higher for a month or a little more. The highs are generally lower over a month or two, but we're going sideways for the most part. So I'll save my breath and talk about it in the next day or two to a greater extent. So neutral for the moment. Silver, bullish engulfing today, and by itself, it does imply there's supposed to be a bit of a rally. Doesn't tell you how far it's going to go. Doesn't tell you how long it's going to last. It just implies that the market's going to pop up somewhat. I'm with that. I think it's going to rally a little. It did come down to support, and it did get very close to oversold, but not quite. So what are we going to do? Come up to 23.3? Yeah, probably. Next, platinum. New low, but it's not staying down there. It's now higher on the day near its high. And that also looks like it could bounce a little bit, but the trend is definitely down on a longer term basis. For the last few months since last summer, it's sort of sideways. You got 3 major highs, one of which we got ER sell signal read perfectly. Bottom we got perfectly. So we're between a rock and a hard spot, so to speak, and we've just tested the lows we made 3 times before, the same area, and we got, well, fairly close, not really close, but a little bit to oversold condition. So maybe a little bit of a rally. This is kind of iffy. I don't know. Let me save my breath, go to the next one. High grade, now oversold, in support, classic combination to begin a rally. And that's exactly what I have to say. So where can it go? Well, I obviously think it's going to go back up to 3.7 at a very bare minimum. It's there already, so forget that. Maybe back up to the next resistance area, rocking a hard spot, and maybe that would bring it back up to 3.95. Why not? Next, bear trend, last signal, buy signal did not work. New lows last couple of days, not oversold whatsoever. Looks like this soybean chart is going to dribble down lower slowly. Now, all of the grains look somewhat similar, unless there's a brand new signal, and we'll find out here. We got soybean oil, downtrend, got oversold a couple of days ago. Here we have 1, 2, 3 days with the rally, not a surprise. And getting back up to this resistance area is exactly what it's already done. So any moment, I think it might turn back down and slowly make new lows again in a week or something. Meal, soybean meal, in the process of doing that exactly. We're almost in new low ground, low and last. Looks like it's going to do it before the day is out. So I'm expecting a test of the 337.7 area. Next, corn. Second day oversold. Again, if you're short, tighten up your buy stops, protect your profits. And I'm looking for a buy signal that we do not have yet. If we get above yesterday's high, we will get a green buy signal. Could be as good as this one. That one worked for about a week and was a pretty nice little rally. Nothing great. This one didn't work. And some of my other signals in corn have worked, but not the greatest last year or so in the corn market. Next, wheat. I've been alluding to the possibility that since October, there's some sort of a bottom building in wheat. Can't put my finger on it yet, and I don't want to say that it is building a bottom. But today, we're starting to challenge some very minor support levels. And if they get broken, then we're probably going to come down to the previous low. And if that happens, we're probably going to break into new low ground again. So I don't have much faith in any bullish commentary, but if we hold these levels and start to move back up, I'll have to keep commenting about possible bottoms, but I don't have a lot of faith in that yet. Next, live cattle. Sell signal a couple days ago did not work. We got short the next day and got stopped out the same darn day. Small loss, that's it. Bad signal. But we are overbought, and today we hit the resistance level very accurately. Doggone it. And if we get below yesterday's lows, which doesn't look particularly likely, we would have a bearish engulfing again, and that would be the second time in 4 days. And it hit resistance, and it's yellow, so it's overbought. I'm not going to be surprised, but at least I'm expecting it to turn back down, a bearish engulfing or not, to the support level. Next, we already did that at resistance a few days ago with hogs. Got overbought. We don't have a signal almost on February 1st, not quite. And here's a new low. Now we're getting back down to support again. So can it hold at the 78-ish level again? Well, let's see if it does. So that's what I was expecting on the downside. And maybe we're still between a rock and a hard spot here and just going to continue to bounce around a little bit. No particular trend momentarily. Here we have a new high in OJ, right in the ballpark, very, very, very close to this tops that we had back in October 31st, and which was a bearish engulfing ER sell set goal, and November 21, the top of the market, historic highs with an ER bread sell signal. So we could have another one, maybe, if today we get below yesterday's lows. I'll have another one in the same resistance, longer term resistance area. That could be a whopper again. Both of those previous signals, not that, past performance is indicative of future results and hypothetical returns to some inherent limitations, usual disclaimer, but it could happen. This is how it develops before it turns red. Next, cocoa. My gosh, look at this blow off top. Markets usually cannot maintain this kind of a move up unless there's some major reason behind this kind of a move. We did see that a year and a half ago with the beginning of the war in wheat, which went limit up bid for several days, I think over a week in a row, before finally it topped out with an ER sell signal on the historical high in wheat. Boy, that would be fantastic for cocoa, but it doesn't look like it at this moment, that's for sure. But that's exhaustion strength, maybe even a little exhaustion gap here today. The low today is 5,451. Yesterday's high was 5,874. So today's low is below yesterday's high by just a little bit. Am I right about that? Yesterday's high 54.29, today's low 54.50. No, there is a small gap. I'm sorry, I had the wrong numbers. There's a small gap between today's low and yesterday's high. That could be an exhaustion gap. Next. So far, this has been a real labor to figure out whether the head and shoulder top, which still looks barely okay, is going to happen. I need to see this start to fall apart real soon and start to come down. The shoulder is bigger than I expected and a little higher than I expected, but it's basically there. Timing is off, price is off a little, but again, the pattern is essentially good, and the downside objective, if it works correctly, is 146.85. Next is sugar. Bearish engulfing a couple of days ago with some downside move afterwards, but certainly not very much. Then yesterday, it popped up significantly, for all practical purposes, killing the signal. You could have made a little bit on that signal, but you had to be fairly nimble. So, sideways, waiting, resistance. Oops, I'm sorry. Overbought several days in a row now, getting back to resistance again and caught in the rag, looking for a sell signal, looking for a top, looking for a turn down. Back to the E-mini, holding. Markets are down very, very little or up just a little. Have a great trading day. Profitable trading to you.